This is Bloomberg Daybreak Middle East and Africa, our top stories this morning. All eyes on the Federal Reserve. Stocks follow Wall Street lower this morning on worries of higher for longer rates. Israel reportedly won't join truce talks unless Hamas responds to the latest proposal. Meanwhile, Prime Minister Benjamin Netanyahu says stopping the war before eliminating Hamas is out of the question. New York City police officers arrest pro-Palestinian demonstrators at Columbia University. That just a few hours ago. It's just gone 8 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's see how we are shaping up for the Wednesday session. Futures look to be a little bit mixed. Nasdaq and S&P futures are lower. Dow futures, though, at the moment pointing to a higher open. This after a pretty major sell-off yesterday across Wall Street. We had markets taking a hit on worse consumer confidence data than the market was expecting. Also, the employment cost index showing inflation going in the wrong direction. It's not going to make the Federal Reserve's job easy this week. And unless Fed Chair Powell is a little bit more dovish than the market is anticipating, then we could see a resumption of that sell-off, according to our MLive strategists at least. So as you can see, we had the two-year yield pop above 5% once again. So definitely treasuries showing the brunt of this. And then we have that risk premium continuing to come out of oil as these negotiations continue in the Israel-Hamas war. So Brent crude now at 85.60 a barrel. I do want to point to this chart, though, because it shows you just how much air has come out of the Fed rate cut bubble. We're basically at the lows of the year in terms of what we might see after the FOMC meeting today and on into the rest of the year. Markets pricing in just more than one rate cut this year and not till the very end of the year. Well, we had a very volatile week with the yen and also markets closed in much of Asia today, but there are some markets open. Let's check in with Avril Hong now in Singapore to see what exactly is going on. Avril.
Yeah, Vonnie, against the backdrop of those recalibrated Fed rate cut bets, we're seeing risk aversion in the U.S. that's trickling through into the Asia-Pacific. As you say, many markets closed, but we already have Japan starting the month of May on the back foot. The Nikkei slumped as much as 1% earlier in the session after experiencing already its worst month since November 2022. Its pairing gains actually flipping into the green now. We're also seeing losses in Australia and New Zealand stocks. Let's flip the board and take a look at dollar yen because, of course, we've been seeing it stabilizing a bit, but then pushing towards that 158 handle now, really keeping the Japanese officials on their toes, especially as these bets of hawkish Fed rhetoric ramp up. We also have no confirmation yet that they did step into the markets on Monday, but based on Bloomberg analysis of BOJ accounts, they think that as much as $35 billion was spent to prop up the currency. Certainly something that we'll be keeping an eye on into that FOMC meet, Vonnie.
Yeah, exactly, Avril. That will also impact any further intervention decisions should they be necessary. Avril Hong there in Singapore. Well, as Avril said, Federal Reserve officials poised to keep interest rates steady for a sixth consecutive meeting and signal no plans for cuts in the very near future. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. If we get a relatively hawkish Fed Chair Powell, or at least one that's not pivoting anywhere anytime soon, are markets priced for that, Garfield, or do we see another repricing after the news conference?
Well, Vonnie, it's going to be very difficult for the markets because they're so fractured about what they think might go on. And the Fed itself has obviously palpably been surprised by what's gone on with the data. The previous Fed meeting, they stuck with their dot plot for 3 rate cuts. That was back in March. And it's clear now that that's not going to be achievable absent a severe deterioration in the economic position. So the Fed is going to have to move its rhetorical stance to the hawkish side relative to previous meetings. But the question is, does that end up being as hawkish as the market is fearing, more hawkish or less hawkish? And it could all hinge on almost which questions get asked of the Fed chair. If Powell is asked, do you think there's a chance for a rate hike, and he opens the door to a rate hike, well, that could set off major jumps in yields and declines in stocks. if he's not asked that, if he's asked, do you still expect to cut rates? And he says, well, it probably still is our base case that there will be the chance to bring rates down from their current restrictive level. Well, that could set off a risk rally. The bigger concern, well, not the bigger concern, but one of the concerns for investors also is that whatever Powell says tomorrow might end up being overwritten one way or the other by non-farm payrolls at the end of the week. If that shows no extra slack in the labour market, then that's going to be hawkish in and of itself. If it's a downside surprise, we haven't had many of those recently, but if it is a downside surprise, well then that could mean that even a hawkish Powell ends up being pushed aside as far as the market's concerned, when it looks at finally or yet again signs that the labour market is cracking, and that means that a Fed that still does, when it comes right down to it, want a soft landing and therefore is biased towards doing a rate cut when it can, that it is going to get a trigger for that, and so that could set off strong drop in yields and strong gains for stocks.
And Garfield, with the 2-year yield now above 5%, 5.02%, the 10-year yield 4.67, not far off the highs of the year, which would have been 4.73.51. Do we get back up there, you think, before this cycle of repricing is finished?
There's plenty of potential for that. I think especially when it comes to the 10-year yield, the longer term, for longer dated debt, the outlook is a little bit dicier because you had the quarterly refinancing adjustment that came out and was a surprise to the upside. There's lots of anticipation that the government's going to be borrowing plenty, and of course, whoever wins the next election, that they're going to be interested in spending a lot. So that longer term outlook, along with sticky inflation, it makes it hard to see 10-year yields coming down all that much. For 2-year yields, all they really need is an end to this speculation that there won't be any cuts and confirmation that cuts are coming, and they should come down. So there's a lot of appetite across bond investors for yields at these levels. So far, that's mostly gravitating towards the shorter end, and that shorter end is going to go on being attractive in the short term, so to speak, because of those risks that I cited for the longer term.
All right, well, that news conference coming up at about 10:30 p.m. Dubai time. Garfield Reynolds, who leads our Markets Live Asia coverage, thank you. Let's bring in now Jan Lupalek, who is Global Head of Credit Ratings at S&P Global Ratings. Excited to have this conversation, Jan, because obviously the narrative keeps changing. We're in volatile times. Just a couple of weeks ago, we weren't sure if we were about to head into all-out war between Israel and Iran. Has that particular risk receded dramatically in S&P's eyes now?
Not really, Vonnie, and thank you very much for having me. Geopolitical risk, has been something that was not really on anyone's radar up until, Russia invaded Ukraine. But now, from our perspective, and we hold our Credit Conditions Committee every quarter, after the attack from Iran on Hamas, we actually said that this is the #1 risk for both macroeconomic and credit conditions over the world, and particularly in this region. At this moment in time, the big downside would be an escalation of the conflict. In this particular region, in the Middle East, in our sovereign ratings for most of the governments, there's a certain element of regional geopolitical risk that is baked in, but certainly not an escalation of what is currently the situation. So like every other market participants, we are really watching this very closely. The central scenario is that there won't be any escalation, but again, significant downside.
Well, you downgraded Israel's rating just a couple of weeks ago to A+ with an outlook negative. What would it take for you to reverse that decision, or is that Israel's credit rating now for some time?
I think we need to get away from just the Israel situation. As I said, it's the entire region that could be impacted. At this point in time, obviously, Israel is directly impacted in its economy by what is going on. For the other countries, that is less of a risk. But again, if there were to be an escalation or, a block of the Strait of Hormuz, then, the consequences in terms of hike in oil prices, could be positive for some of the economies, but then in terms of their ability to get, that oil onto the end customers would be extremely complicated.
What are the other challenges facing the global economy? Because obviously, if there is an escalation, on some front, whether it's in Ukraine, Russia, or in the Middle East, you'll have to rethink your whole credit ratings, right? But other than that, what are the other problems that you're facing around the world when it comes to individual economies?
So actually, when you look at what happened over the past 3 years, and particularly when it comes to the US economy, it's been surprising on the positive side, and that's exactly what we're talking about at the moment. Will there be an interest rate cut? Probably not next June, as our US chief economist thought up until a couple of weeks ago, but probably from September. How many of those interest rate cuts? It's all down to the fact that the US economy has been in rude health. So coming back to major downside risks, we go back to basically traditional credit risks. Higher for longer. If interest rates stay at this level, any weaker borrower that particularly is borrowing on not on fixed rate but on floating rates is going to be impacted. And the second major risk would be basically a hard landing, particularly of the US economy or some other economies, because the US economy has been supporting the rest of the world economy, particularly in the Gulf Cooperation Council.
What about real estate? Because even in the United States, where the economy is strong and defying all expectations on many fronts, real estate is a little bit of a problem.
It is on the list, but a bit further down, because at the moment it seems to be pretty much under control. But you're right, commercial real estate in the US is still something where some of the regional banks are keeping some significant exposure. But the biggest case in point is China. China is the second, engine of growth for the global economy, and the ability of the Chinese authorities to keep that situation under control will be critical. China is now growing at half the rate what it used to be, down to 4.6% this year, probably, from Asia chief economist. That's a significant slowdown, and that situation is going to drag along. We don't think that is going to create, any crisis, but it's going to weigh on the ability of the Chinese economy and other Asian economies that depend on China for their export. That's going to weigh in and slow things down.
So it sounds like you're very much expecting a divergence among economies, particularly until the Fed starts to cut rates, right, which then might take a little bit of pressure off some of the emerging markets in particular. Which emerging markets are you mostly keeping an eye on?
So in terms of the positive side, another country that we haven't mentioned so far that is really raising its head is India, where we actually upgraded our growth forecast to about 7.6% for this year. And under any scenario, the Indian economy is going to grow around about that rate for the next 10 years. So that means that the Indian economy is becoming, a major player that has to be, reckoned with, and on the positive side. More on the negative side, I'd say that in general, it's not a question of established markets or between established markets or developing markets. You've got some, lots of fiscally strained situations on some of those government balance sheets, whereas, because of COVID and various subsidies, there's been a lot of debt that's been raised, and some of the sovereigns around the world, both, developed and developing, have got some fiscal rigor to re-establish. So that's something that we will be watching very closely.
The lingering effects of COVID. Thank you so much, Jan. We have to leave it there, but much appreciate your time this morning. That is Jan Lepalek, Global Head of Credit Ratings at S&P Global Ratings. Up next, the latest on the conflict in the Middle East amid Israel's reported reluctance to rejoin ceasefire talks. Plus, Citi joins later this hour to talk about the listings buzz in the MENA region. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. New York police officers entered Columbia University's campus a few hours ago, arresting pro-Palestinian demonstrators who had barricaded themselves in a building. Colombia President Minouche Shafik said she asked police to clear all protest encampments and maintain a campus presence through at least May 17th. Meanwhile, state-run Khan News reports that Israel will wait for Hamas to respond to the latest temporary truce and hostage release proposal before considering to join ceasefire talks on the Gaza conflict. For more, let's bring in Bloomberg's Derek Wallbank. Derek, if you could cut through the noise for us, because we hear a lot of the same rhetoric. We hear Benjamin Netanyahu talking about going into Rafah still, and we hear, cabinet members saying there needs to be a full response, including Rafah. And at the same time, it seems like there might be progress being made on some kind of a ceasefire agreement.
Vani, I think that one of the things that I would look for in this scenario is that there are going to be a lot of no's before you get to a yes. And we're in the middle of the no's. Are we at the start of the no's? Are we near the end of the no's? That's a little bit hard to say. But I do think that you should be prepared to hear a lot of no before you get to yes. Certainly here, as you mentioned, there's questions about how much Israel's going to be involved in talks. I think certainly they are involved in talks at some level, right? There's their own negotiators. There's the people who are sort of taking their claims a little bit by proxy and trying to advance some sort of solution. So I think the idea that they're not involved at all is probably not quite correct. There's a certain amount of symbolism to where they go, where they meet, who goes there, who meets there, etc. But a lot of these sort of moves are designed to put pressure on the other side. You mentioned Netanyahu's words. You mentioned the questions about whether Israel would attend talks in person in Cairo. All of that, to me, reads like a pressure-building exercise to try and get Hamas to bend. At the same time, though, Israel is facing pressures of its own. Right? There's the International Criminal Court considerations, reports that there may be some actions taken there that Israel would really rather see not taken at all. And so there is pressure, I think, on both sides, and there's efforts in escalating that pressure to try and make some sort of movement. At the same time, as you mentioned in your lead-in, there is also pressure in other places that have been Israeli allies, particularly the United States, with these college campus protests, which have only spread in recent days, and now, as we're seeing on campus at Columbia University in New York and in other places, are starting to get dispersed by police officers, leading to dozens of arrests on college campuses across the United States. So all of this, I think, is building up this sort of pressure where I think a lot of leaders want to get to a deal. The framework of a deal is very much an open question, what that might look like. But I do think that you're seeing escalatory pressures across a lot of different theaters at the minute.
Israel is going to want to retain optionality, right, on Rafah. I mean, at the moment it says it's going in and there's no question about it, but it's going to want to maintain at least optionality. Hamas wants a permanent ceasefire. Where does the bridge happen there? Will Hamas back down on the permanent ceasefire request?
It's one of those things that I think from the outside it seems. You can say from the outside for this and so many other things that it seems like there's a path that's available, but within those two positions come intractable red lines, and it's so very difficult to see where exactly this gets constructed. I mean, peace in the Middle East is not an easy thing, or otherwise it would have been done years ago. I think that here there is a concern. I think the primary concern on Israel's point of view is that they can't have another October 7th style incident, and there can't be the capability to have another one of those incidents. At the same time, we've noticed that there have been movements in the red lines overall, because remember that at the start of this campaign, Israel was saying they didn't want Hamas to exist at all in any form, and now we're talking about the constructs of some deal with Hamas leaders who are based outside of the country. So there has been some movement there. I wouldn't want to say that there's no movement, but it's a little bit hard to predict where exactly this comes through to. I will say that negotiated ceasefires have been something that we've seen a little bit temporary. We've seen some flicks at that. But if there were to be some sort of ceasefire and that were to be broken again, you'd be back again to this sort of situation of maximalist pressure. And I think that what people are looking at, I think on both sides, honestly, in some amount of good faith and good intention, is they want something to be durable. Whatever the durable thing is, they want it to be durable. And I think a lot of folks on the outside, and you're seeing these comments from the Saudis, among others, want to try and solve some of these underlying problems as we get to a ceasefire condition.
Well, Derek, more meetings taking place today with Anthony Blinken and others. Thank you so much for all of that context. That's Bloomberg's Derek Woolbank. Plenty more still ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai, and Amazon's cloud unit seeing the strongest sales growth in a year, signalling a turnaround for the retailer's most profitable division. Let's get more now from Bloomberg's Ed Ludlow.
Amazon gave the AI story that investors wanted, and that principally centers around AWS, the market leader in cloud. The run rate on an annual basis for cloud sales is $100 billion, and this was a business that did $90 billion of sales in 2023, but they went a step beyond that, saying specifically there is revenue from generative AI with a run rate in the multiple billions of dollars. That all means some more spending, though. And Brian Ozowski, the CFO, basically said CapEx in 2024 is going to have to increase meaningfully in the context of what's required to support that AI growth. You know, the customer or demand narrative is really strong. Customers signing longer-term deals, more meaningful deals, particularly centered around generative AI. The 2Q sales guide was soft relative to expectations, and the e-commerce business continues to see a slowdown. So Amazon's also looking to other bright spots. It is this kind of many-tentacled beast. So in this quarter, for example, really strong growth in advertising. It was the first quarter in which ads were placed alongside Prime Video, and that was showing up meaningfully. Advertising sales rose 24% in the first quarter. You know, Andy Jassy's story has been one of discipline, particularly on spending, belt tightening. But right now, the investment is there for AI to meet what is clearly tangible demand, particularly for their cloud business. Ed Ludlow for Bloomberg News in San Francisco.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. All eyes on the Federal Reserve. Stocks follow Wall Street lower this morning on worries of higher for longer rates. Israel reportedly will not join truce talks unless Hamas responds to the latest proposal. Meanwhile, Prime Minister Benjamin Netanyahu says stopping the war before eliminating Hamas is out of the question. In New York City, police officers arrest pro-Palestinian demonstrators at Columbia University. These pictures just a few hours ago. It's just gone 8:30 a.m. across the Emirates. I'm Bonnie Quinn in Dubai, and it's been an interesting few weeks in this market. Let me tell you, it's an interesting day as well. Federal Reserve and the news conference at about 10:30 p.m. Dubai time tonight, and then, of course, non-farm payrolls Friday. So it's going to be an interesting rest of the week as well. Right now, it looks like there's a little bit of risk aversion, to say the very least, in the market. Dow futures are pointed higher, though, so the market may be trying to make up its mind. This after pretty severe losses yesterday following weak consumer confidence data out of the United States and strong employment cost index data. Really just a bad mix for the Federal Reserve going into this meeting. Mind you, markets are already pricing out hikes, as we know, till the end of the year. But you'll see it in the two-year yield as well, back above 5% and well above it at this point. We're practically at 5.025 right now. And that risk premium continuing to come out of crude oil. We have Brent crude right back down to 85.58 a barrel. So as I was saying, the FOMC meeting later today, obviously we're not expecting any interest rate change, let's say, but we might get some language that might indicate hawkishness or maybe not on the part of the Fed chair. Look at what markets have priced in. They're basically all year long they've been pricing out rate cuts. That's how busy markets have been. And now we're looking at just more than one, just barely more than one by the end of the year. Risk aversion spreading across Asia as well, even though most markets are closed. Let's get the latest from Avril Hong, who is in Singapore. Avril.
Yeah, Vani, it's risk-off in this part of the world, the markets that are open anyway. Although there are some pockets of optimism, we're seeing the Japanese stock benchmarks in negative territory. On the topics is the oil and coal-producing stocks that are among the big decliners as energy prices come off. And we're seeing the stock of Lasertech, the big gainer in the Japanese market, after it showed that strong order growth as well as an earnings beat, surging double digits, helping to cap the declines on the Nikkei. Mitsui, this is another stock that is something that's in focus today, and this is after its earnings met expectations, but it announced a share buyback in order to unlock value for investors. And of course, this is a trading firm that is a favorite of Warren Buffett. Let's flip the board and take a look at dollar yen. Of course, we've been tracking it all week after that stabilization. Following what was believed to have been intervention by Japanese officials, we're seeing it nudging back up towards that 158 handle. And here it's really a matter of how it's not just one move from Japanese officials. It's going to be potentially continuous intervention in order to keep dollar yen stable. Funny.
Well, we will be watching for that. Avril, thank you so much. Avril Hong there in Singapore. Well, the Middle East's listings buzz continues as appetite for IPOs remains robust in the region. Dubai's latest offerings from high-end supermarket chain Spinneys, well, it's expected to price at the top end of the range today for institutional investors. Let's bring in Rudy Sadi, who is head of MENA ECM at Citi. He joins us now in studio. So it seems like liquidity is improving and there's lots of excitement and there's no end to it, Rudy. Can we expect this for the foreseeable future?
Absolutely, Vani. Good morning. Thanks for having me. Look, the outlook for MENA market is very positive. About $1.5 billion of issuance year to date. With the Spinneys IPO that you mentioned, that would be close to $2 billion. The currency peg is giving a lot of stability. The oil price, the fiscal balance, inflation being to an extent under control are all positive for the market. We're expecting a positive pipeline for end of this year and 2025. So that trend is expected to continue.
So this all helps to build out a very strong and healthy market. How to keep the liquidity going, though? Do you have to look elsewhere for investors, institutional investors, retail investors?
Look, government issuances and IPOs are massive wins for the local exchanges. What we need to see, Vani, is more private companies coming to the market. Spinneys is definitely the right step in the right direction, but we need to see more private companies coming to the market. And our message to private companies, if you are coming to the market and you're not government linked, you're not going to suffer from valuation. International investors, they want to diversify, they want to invest. There is a big focus on retail, consumer, healthcare, tech. These kind of sectors are still missing in the region.
What is the reluctance, do you think, Rudy? Is it that companies don't need to go public or that they are afraid to for some reason?
I think it's a mix of both. In the past, we haven't seen a lot of private companies coming to the market. Saudi is maybe one step ahead when it comes to that. You see private companies coming to the market. And the UAE, Spinneys is one of the first one. But there are a number of IPOs in the sector that I mentioned that are coming by the end of this year or 2025. So hopefully that will change the mindset with private companies.
Regulators and watchdogs and so on have been doing a good job. Recently, Dubai, I should say, got off the grey list, for example, which definitely helps. What more needs to be done quickly by regulators and other watchdogs?
Regulators, and credit to DFM and ADX and Tadawul Stock Exchange, they've done a fantastic job in moving the rules and regulation for IPOs in line with international standards. What we're missing, Vani, is regulation in the secondary market. We're not seeing enough secondary offering, fully marketed offering, accelerated book build, exchangeable bonds. We need to work with the regulator and exchanges to revamp these rules and guidelines to allow secondary offerings in the market. This will help to make the Middle East a more sophisticated Middle East ECM market.
Are international investors being courted? Is there enough being provided to them in order for them to find this area attractive?
Look, allocations to international investors is a very important point, and I'm glad you mentioned it. In recent IPOs, let's say over the past 5 years, honestly, allocations to international investors were low. International investors, they do a lot of work early on. They de-risk their IPOs. They give you clarity on valuation. They give you clarity on their ticket size. They de-risk the offerings. But then they get very low allocations. Now, that trend started to improve. In recent IPOs, the portion going to international investors has been a little bit higher. But we have to give more to international investors, because if we don't, we risk that international investors will lose interest in this market.
We have a lot of movement in Saudi and a lot of movement in parts of the UAE, but there are other markets that really need to be built out. What will the next one be that sort of sees a lot of activity?
So you're right, UAE and Saudi are the biggest. Oman started to wake up. You've seen an IPO price last year. There's more IPOs coming this year and next year from Oman, which is fantastic. We hear about Qatar could be next, and hopefully, if Egypt economy stabilizes, then it could be the next one coming as well in the next 2 to 3 years.
Can you see investors embracing these sort of, I don't want to say new markets, but they'll be newly attractive markets?
Yes, absolutely. Look, we had a survey with international investors and we spoke to international investors. If you look at the structure of the local markets, it's mainly real estate, banking and petrochem. So international investors, they want to diversify away in new sectors in different jurisdictions. They aren't very active in other EM markets, so the Middle East is really the only game in town for them at the moment.
Speaking of which, we've seen a lot of activity around crypto and AI and so on in Dubai. But if you move to Saudi Arabia, you see almost no tech. Why is that? What can be done to sort of improve the tech sector in Saudi?
You're right. Look, when it comes to tech, so the rules and regulations in the region do not allow you to take a tech company public if it has a negative net income. And as you know, many tech companies are not profitable because they have high growth. So we need the regulation to change to allow tech companies to come to the market. Number two is dividend yield and dividend payout. Tech companies do not pay dividends. And in the Middle East, dividend yield and dividend payout is very important for them. So if we can move the market away from dividend yield and allow them to value growth, then you would see much more coming from tech and fintech in the market.
That's fascinating. The Federal Reserve, and when it cuts rates, is that having any impact on what companies decide to do in these parts?
So this was an issue maybe 18 months or 2 years ago when there was no clarity for issuers, CEOs, selling shareholders on where we are in the interest rate cycle. Today we are at the peak or close to the peak. So we see more companies coming public. And when the interest rate will start dropping, the high yield in the region will be actually a plus. And for the future IPOs coming, when interest rate will start dropping, they will not need to pay such a high dividend yield to match the interest rate. So that's actually positive.
This idea of private companies going public, is there material out there? Are there companies that might be ripe for going public, and how do you approach them, or how does one sort of make them aware that that's a possibility?
Look, first of all, we have to give them comfort and confidence that international investors do not only invest in government-owned companies. Spinners was an excellent example, and this is the first, right? But there is much more coming. Number two, the local market and the retail investors, retail, institutional, family offices are actually ready to invest in growth companies. So when we meet with these companies, if they are delivering growth and it's a solid story, there is absolutely no reason why the local investors, including retail, to invest in these companies. From a city perspective, look, we are top ranked in this market. We're actively meeting with CEOs and issuers to explain to them how we can market their equity stories. And it's only a matter of time before you see them going public.
Rudy, thank you. Really fascinating conversation. Would love an update again very soon. That is Rudy Saadi, head of MENA Equity Capital Markets at Citi. I do want to break. First, Abu Dhabi Bank beating estimates in its earnings report, coming in for first quarter. Reported profit of 4.15 billion dirhams. That's more than the 3.9 billion that was anticipated by analysts. So a better report there out of First Abu Dhabi Bank. And don't forget, that stock is down more than 10% this year, just this year. So we'll see if this helps. Net interest income up 10% year over year. And total assets for First Abu Dhabi Bank up 5.7% year over year. They're at 1.24 trillion dirhams now. It's been a good season for the region's banks. Well, sticking with the region, BlackRock is set to receive as much as $5 billion from Saudi Sovereign Wealth Fund, PIF. The aim for the world's largest asset manager to invest in the Middle East across different regions, asset classes, in both private and public markets. So for more, Christine Burke, our Saudi bureau chief, joins us now. Christine, tell us about the size of this investment, and presumably it all happened because BlackRock was holding an event there, right?
Yeah, that is correct. So the first thing that I will say is that BlackRock's Larry Fink has kind of long had this romance with Saudi Arabia. We know that he often comes into Riyadh. He flies in on his private jet. He's actually had dinner with the Crown Prince himself a number of times. And executives have said in private that Saudi Arabia remains a priority market for BlackRock. So here we are finally seeing that maybe, all this courtship has paid off. So what we know, as you said, is that Saudi Arabia's sovereign wealth fund has agreed to give as much as $5 billion to BlackRock. And what this will do is help BlackRock to establish a new entity that will invest in the Middle East. BlackRock will also build out an investments team that is going to be based here in the capital city. This new entity will also be working to raise more money from investors abroad. So really, it looks like a win-win for both BlackRock and for Saudi Arabia. BlackRock gets that presence in Saudi Arabia that it has long been looking for. And Saudi Arabia, on the flip side of that, gets to try to build out its asset management industry, which up until this point in time has been mostly local. And of course, also Saudi does need that foreign direct investment for Vision 2030. So with BlackRock going out there, trying to help raise funds, again, a win-win for both.
Is BlackRock stealing a march on other asset managers here? Christine, is the work that Larry Fink has been doing, did it pay off in the sense that it might have paid off for others? And just also contextually, is $5 billion a lot for PIF and for BlackRock?
I mean, look, the PIF has more than $900 billion on its books, right, in assets. So really, it's probably a drop in the bucket. I think it's really more so about the fact that we're seeing such a big name in the asset management business. I mean, BlackRock is massive, coming into Saudi Arabia, agreeing, firmly saying, we believe this is a growth market. We believe in the investment opportunities here. As we were kind of saying earlier, Saudi Arabia has the asset management industry here has really long been dominated by local names. We did see Franklin Templeton recently get a license to establish here. So it is an industry that is growing, but it does look like BlackRock is really going to be at the forefront of perhaps drawing in some of the bigger names into the kingdom.
And of course, it is a massive week, it seems like, for Saudi Arabia. Christine, what else are you watching today? We also get, obviously, data.
Yeah, that's right. So we get Saudi GDP in about 90 minutes. But I think the thing that I'm more interested and excited about today are SABIC earnings. SABIC, of course, being the Saudi chemicals giants. That's a company that had a pretty nasty year in 2023 as the broader petrochemicals industry came under a lot of stress. Global macro conditions, weakened demand. Petrochemicals producers were forced to cut their product prices, and their margins got absolutely hammered. So I think we will really be looking for SABIC today to give us an update on the status of the market. We're widely expected to see a drop across most of its main metrics, so I don't think it will be so much about the direction, but the magnitude. Interestingly, we've already seen BASF, Dow, and Sinopec report. BASF did say it's seeing a little bit of recovery in the petrochemicals industry in China, and Dow also said that it believes there will be a demand recovery. So what we'll be looking for today is the narrative, the commentary from SABIC. Does it see that market conditions are improving, or is it still really struggling with weaker demand?
Christine, thank you so much. Christine, all over everything Saudi this week and every week. Saudi Bureau Chief Christine Burke there. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. In Kenya, floods and mudslides have killed at least 169 people. The death toll is expected to rise as torrential downpours caused by El Nino weather conditions continue. For more, let's bring in Bloomberg's Ondiro Oganga. She joins us now from Kigali. Ondiro, what do we know so far?
Vonnie, we know that rain continues to fall and it's increasing the risk of flooding. So far, 191,000 people have been displaced, majority of them being from Nairobi, the capital city of Kenya. We're seeing both slums and suburbs flooded, people being forced to leave their houses and seek shelter elsewhere. Many were caught unaware by the flood and had to take shelter in places like the roofs of their houses. But the worst tragedy happened in Mai Mahiu, where 4 villages villages was swept by water. Tens have been left dead, dozens have been injured, and rescue operations at the onset of the tragedy was really slow, but we're seeing the government now coming in. The rains have caused havoc. They've affected infrastructure. The airport is flooded, roads and bridges have been cut off, and school reopening has been postponed by a week to keep learners safe. But also schools are used as evacuation centers, and they're still needed for as long as the flooding continues.
It's desperately sad. How is the government responding?
Well, the cabinet has directed that those living in areas that are risky of flooding move to safer areas. Those living near dams, near rivers that could burst their banks, and riparian land find safer grounds to avoid any impending tragedy. The government has also said that they've received requests of up to 4 billion Kenya shillings from county governments in terms of emergency rescue efforts that they can do. Unfortunately, the government can only pledge 1 billion Kenya shillings because Kenya is already coming off from a flooding season during the El Nino rains, and so they've used a lot that they had in their contingency kitty. President William Ruto, speaking about the victims of this flood, said they're the victims of climate change, and if nothing happens, this predicament will continue dogging the people of Kenya. It's not just Kenya that is suffering from these floods. Tanzania, Uganda, and Burundi are also reeling from the effects of this ongoing rainfall.
Ondiro, thank you so much for that update. I know you'll be keeping an eye for us. That is Ondiro Oganga in Kigali. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Well, there's no escaping the global phenomenon that is the diabetes and obesity drugs Ozempic and Wegovy and what they have caused. The producer Novo Nordisk has become Europe's most valuable company, and its home country, Denmark, is feeling the effects. For more on this, our Copenhagen reporter Sanne Vass joins us now. So Sanne, take us through this. How is Novo Nordisk's growth changing Denmark?
Yeah, well, Novo Nordisk is completely transforming Denmark. I mean, for one thing, Novo is the reason that Denmark's economy even grew in 2023. GDP was up by almost 2%. Without Novo, the economy would have stagnated. And then we're seeing a really massive impact locally in the cities and the towns where Novo is present. Personally, I went to Kalundborg recently, which is one of Novo's manufacturing hubs, and it's putting a lot of money into expanding its factories there in order to produce more Wegovy and more Ozempic. And you're really seeing the economy there flourishing. Educational institutions are emerging. Infrastructure is being built around Novo, and of course Novo is creating a lot of direct jobs, but also indirect jobs in form of suppliers and construction workers and so on. But even for Danes who have nothing to do with Novo Nordisk, they will still have felt its gains, and probably they would have seen their pension savings grow because Novo's shares have risen so significantly. And of course Novo is paying a lot of corporate taxes, which is benefiting the average Dane as well.
So, Sanne, what are the challenges, or maybe frictions is a better word, that come with all of this?
Yeah, that's a very good question, because of course this is mostly a positive story for Denmark, of course having such a big growth engine, but it also does come with challenges, especially for such a small economy like Denmark. We're a country of 6 million people. For one thing, we're hearing businesses complain that Novo is vacuuming the workforce, which is making it really hard for businesses to recruit. And even the armed forces have said they're losing officers to Novo Nordisk. So that's kind of the very local impact. And then more generally, we're also seeing concerns over political favoritism, especially because Novo has such close ties to the government, and there's really a lot of political attentiveness to Novo at the moment. And then finally, the massive size of Novo is also just generally triggering the question in Denmark, is it healthy for such a small economy to be so dependent on one single company for its growth? Because what happens if Novo fails or even just stumbles a bit?
Yeah, exactly. Briefly, Sana, what would actually happen to Denmark if the company starts not living up to expectations?
Well, it would have massive ripple effects in the economy, and we've seen before how devastating it can be for a small country to be so dependent on one large firm. We saw it with Nokia in the 1990s, where it really transformed the Finnish economy. But as you might remember, Nokia also failed to keep up with competitors, and it really dragged down the domestic economy completely. And you still feel some of the effects in Finland today. So for Denmark, the risk is real. But the good news here is that Denmark and Novo still has time to do something about it. I mean, Novo's patents on Wegovy and Ozempic, they expire in the early 2030s. And that still gives time partly to Novo to figure out what's next, but also to Denmark to really diversify its economy.
Well, it's a great story and goes into all of the details on these drugs that it seems everybody is using right now for the better, for the most part. That's Bloomberg's Sana Vass. Thank you. Take a look at how we're shaping up for the trading day, because we did have a down session yesterday and it looks like risk aversion is continuing into today. The S&P and NASDAQ futures are indicating that we'll have lower opens. Although, it has to be said, Dow Jones futures are indicating higher, so the market yet to make up its mind. The FOMC decision and news conference take place in a few hours, of course. That is setting the tone for this entire day. Do stay with us as we head into the European Open. This is Bloomberg.